So good evening, all of you. I hope you all are doing good. So in the last session, we have started with some very advanced discussion of depreciation with respect to what is WDV, what is actual cost, right? So let's go further ahead with the discussion of actual cost. As I've explained you yesterday that the definition of actual cost is in section 43.1, which tells that actual cost means actual cost of an asset to the assessee as reduced by that portion which is met by any person or authority, right? Now, pay attention, please, all of you. We have also seen certain things that all those expenses which are necessary to put the asset into working condition shall form part of what? Shall form part of actual cost. You have to be making that as a part of actual cost. There are some small ICDS based on that. Let me address that ICDS to you all. If you come to page number 2.5. Yeah, how is it? The color one? Yeah. Yeah. You'll be getting 3 more books now. One detailed book, one question bank, and one more color book. Okay. Now, ICDS 5, tangible fixed assets, which says almost the same things which is generally said by the income tax, which is generally said by our financial reporting also. Admin and general overhead expenses are to be excluded from the cost if they do not relate to the specific tangible asset. So, admin expenses like salary and all, if they relate to the tangible asset, for example, if you are paying salary to certain workers, wages to certain workers, to put the machinery in working condition, say for the purpose of installation, you are paying some salary or some wages to your employees or to some workers, then salary has to be what? That wages has to be capitalized. But if they do not relate to the asset, then do not capitalize. Similarly, expenses which are specifically attributable to construction of a project on acquisition of tangible asset or bringing it to its working condition shall be included as a part of cost. So, moral of the story, it wants to tell you that all those expenses which are necessary to put the asset into working condition shall form part of the cost, and the expenses which has nothing to do with the asset obviously has to be what? Has to be expense out in the P&L. Similarly, further it says that, pay attention please, expenses incurred on startup, commissioning of the project, test run, etc. These are generally done before the commencement of the business. Startup means expenses incurred to make your factory ready. Commissioning means to check whether everything is proper in the factory or not. Test run means pre-production, what you produce, that is known as test run, so that you are very satisfied that all the machineries etc. are absolutely working fine. So all those expenses can be capitalized to the cost of asset. Then they are saying that once an expense is incurred after the plant has begun the commercial production, after that, whatever expense you incur, obviously that should be going to what? That should be going to your P&L account, and you can claim that as what? As your revenue expense. So this ICDS tells you more or less the same thing which your financial reporting also says. The treatment over here is almost similar to your financial reporting. Now, this was about general expenses which are capitalized to the cost of asset. There is one very specific expense also which we were talking yesterday, that is borrowing cost. How borrowing cost will be capitalized to the cost of asset, that is also something which we need to know. Now, borrowing costs are of two types. Suppose this is my balance sheet, and in my balance sheet, I'll just take the balance sheet on the next page. This is my balance sheet, and in my balance sheet, there are two types of loan. One is 10% loan of say 100 lakhs. Now, this is a very specific loan. Specific to what? You have used this money to invest in your qualifying asset. What is a qualifying asset? Can you please tell me the definition of qualifying asset, all of you? Yeah. 12 months, I would come to that, Palani. 12 months, I will just have a discussion on whether it is 12 months or something else. So, any asset which takes substantial period of time, the accounting standard does not use the word 12 months. Any asset which takes substantial period of time for it to be ready for its intended use is known as what? A qualifying asset. Now, generally, a substantial period means a period of 12 months, generally. But in reality, your respective teacher might have told you it can be lesser time also. It can be a lesser period also. It can be a greater period also. Practically, depending upon facts and circumstances, it can fluctuate. But qualifying asset is an asset which is right now not ready for use. It is, you can say, some kind of under construction of asset, right? So till the time the asset is qualifying, what is the treatment that your Ind AS say? Ind AS 23, right, of borrowing cost? I guess you guys are going to give financial reporting. You guys have not done the coaching of first group? You would have done, yeah. You cannot come to for coaching of second group without doing coaching of first group. Not done, Palani? Started, but don't know. Okay, it's Ind AS 23, I guess. I have not read Ind AS in my life because when I was giving my CA, that time Ind AS was not there. But yes, I know the accounting standard very well. It was accounting standard 16, which talks about borrowing cost. So today we are going to talk about how in income tax law, borrowing cost is capitalized. Okay. So there are two types of borrowing cost. One is very specifically loan taken for qualifying asset. So if the loan is specifically taken for qualifying asset, there is no second thought in that. In that case, what will you do? You will directly capitalize that particular expense to what? To the qualifying asset, right? Right or not? But there can be another loan also in your balance sheet, say 10% loan. This interest, how much interest will come on this? Assuming that the loan is for the entire year, the interest will be around 10 lakh rupees, right? This entire 10 lakh, can I safely capitalize to the cost of my qualifying asset?
Yes, sir.
Yes, this you can safely add to the qualifying asset. Let's talk about the second part. Let's talk about the second loan. Suppose second loan is of 500 lakhs. Okay, now this is a general loan. General loan means it might be used for many other purposes in business, right? Some portion of this might be in this, some portion of this might be in cash, some portion of this might be in stock, some portion of this might be in investments, right? Yes or no? Some portion of this might be in some bank account, so on and so forth. I don't know, because it's a general loan. So now in this case, the interest is coming to how much? It is coming to 50 lakh rupees. Now, is it correct to add this 50 lakhs to the cost of qualifying asset? No, it's not correct, because this particular loan is not specifically for the qualifying asset. It is for many assets, which nobody in this world can exactly tell where it has gone, because it's a general money. So for that purpose, the government has to give us some kind of proportion, that how much proportion shall be what? Capitalized, and how much proportion can be what? Taken down to your P&L account, and you can claim that as an expense. Okay. So that is given under the ICTS 9 borrowing cost. Shall we see that? Shall we? Not very important for exam. They have never ever asked these things in the exam. But nevertheless, if they want, they can ask. We cannot say that if it was not asked so far, it cannot be asked in future also. They may ask you. So there are two types of borrowing costs. Just a second, Prashant. Let me complete and I'll come back to you. If the funds are borrowed specifically for qualifying asset, then there is no second thought. Then there is no doubt in our mind. Then you have to what? You must be capitalizing that particular borrowing cost. The doubt is not here. The doubt is in the case of generally borrowed funds, right? The funds are borrowed generally, not specifically. Then you have to use this formula, that is A into B divided by C. Now, obviously, you as a student, you will ask me, what is A, what is B, what is C, right or not? You will ask me these things, sir, what is A, what is B, what is C? So, what is A? What A could be? Obviously, A would be interest cost, right? Interest on which part? Which interest? Obviously, generally borrowed loan, right? We have to apportion that interest only, na, generally borrowed interest. So A is that only, just check it once. Borrowing cost incurred during the previous year, except borrowing directly relatable to specific purpose. Is it clear?
Yes, sir.
Okay, now we have to multiply that by B, because we want some portion of A to be capitalized, right? So we need to find out the proportion. What is the proportion? Proportion is B divided by C. Is it clear? So what is B? Now in B there are three possibilities. Depending upon the assessee, there might be three possibilities. Let me tell you what. Pay attention on the board, please. I am making one small balance sheet in front of you. Okay. There is a small balance sheet in front of you. where I'm making two columns. Pay attention, please, all of you. This is last year, this is current year. This is last year, current year. When I say last year, you can say 31st March 2023. When I say current year, you can say 31st March 2024. Is it clear? Now, on the liability side, I am writing 10% loan. Which loan? General loan. Specific loan, there is no doubt only. Okay. Last year, it was 400 lakhs. But this year, it is 500 lakh, assuming that for the entire year, it was 500 lakh. Okay. Okay. Let's assume that we have taken the 100 lakh extra loan on the very first day. Correct? Shall I go ahead? Now, if the qualifying asset is there, this was 700. At the beginning of the year, qualifying asset was there. And at the end of the year, also qualifying asset was there. Is it possible? I'm just asking you a question. Is it possible that a qualifying asset was qualifying at the beginning also and at the end also it was qualifying only? It's still not got completed. Is it possible or not? Yes, it is possible. Then I will also have a balance sheet total over here, right? Suppose it was 1200, it was 1400. Okay. Now we need to find out how much proportion to be capitalized to the cost of asset. So what is A? What is A over here? Please tell me. Borrowing cost. How much money we have borrowed in the current year? 500 lakhs, right? So A will be 10% of 500 lakhs. That will be 50 lakhs, right? Into what? B. B, right? So we need to find out what is B. Shall we? Now let's read the provision. What is B? In B, there are three possibilities. Let's see the first possibility. Average cost of qualifying asset as on the in the balance sheet as on the first day and the last day of the previous year. Okay. So we need to find out the average cost of what? The qualifying asset. So what will be the average cost of qualifying asset? It will be 750. Is it clear? So all this data has to be given by ICI if they want to ask any question. Right now, there are no questions in ICI material regarding this. They have just given theory for ICDS. They have not put any question, nor they have asked since last 7 years. They have never, ICDS is notified in 2016. Now it is 2023-24. They have never ever asked, but it is our duty to understand the concept properly. Divided by what? Divided by C. What is C? It's very common sense provision. C. What is C? Average of amount of the total assets as appearing in the balance sheet on first day and the last day. So what is the average of the balance sheet total? It is how much? It is 1300 lakhs. Is it clear? So this is, it's very common sense now. This is your borrowing cost. Where the money is going? Either the money is going for qualifying asset and for other assets, right? Yes or no? It's very common sense. It goes with common sense. So whatever is the borrowing cost has to be apportioned in this ratio only, na? In the ratio of qualifying asset to total asset. Yes or no? So that's what they are doing. They are not giving any kind of rocket science over here. It is something which is very, very common sense provision. But the problem over here is A will remain constant, C will also remain constant. Okay, A cannot change based on time. If you have borrowed 500 lakhs in the entire year, you have to pay 50 lakhs and your balance sheet total cannot change. But B will change based on circumstance. How? CB2. CB2. In case a qualifying asset does not appear in the balance sheet on the first day, just wait, don't read ahead. Is it possible that the qualifying asset is not there in the balance sheet on the first day? Is it possible? When it is possible? When it is possible when you started making the asset in the month of June, July, August. Yes? Yes or no? If you started making that asset, if that asset came into existence during the year, then it cannot be on the first day, na? Yes or no? Palani, is it clear? Point number 1 is what? You have to take average of first and the last day, right? When will you take average of first and the last day? The asset has to be there on the first day, na? For example, you started constructing the asset in June. Then how will the asset be there in the balance sheet on first day? Will it be there? It cannot be there. Then what has to be done? Then point number 1 will not work, na? Because in point number 1, we have to take average of 1st April and 31st March. So if the asset got constructed during the month of June, from June onwards, we started constructing the asset. Then point number 1 cannot be applied, right? Is it clear? So Yeah, because on 1st of April, we were not having the asset, no value. So what has to be done? Let me read completely. There are two aspects in point number 2. In case qualifying asset does not appear in the balance sheet on first day, okay? It is not there in the, it means it got started from when? 2nd April, 3rd April, 4th April, 5th April, right? Or it does not appear in the balance sheet on both. It means it was not there in the balance sheet on 1st April also, and it was not there in the balance sheet on 31st March also. When is it possible? It is possible when the asset got started in June, got completed in February. Is it possible or not? So in that case, what has to be done? You cannot follow point number 1, because in point number 1 you need to have the asset on first day and last day both, because you have to take the average of that. So in that case, what are you supposed to do? In that case, you are just supposed to take half of the cost of the qualifying asset. Is it clear? Whatever is the qualifying asset total cost on completion of the asset, whatever is the value, suppose it is 300 lakhs, take half of that. That will become your point number B. Is it clear? So when will you come to point number 1? When the asset is there on the 1st April also, 31st March also. When will you come to point number 2? When the asset is not there on the first day, or the asset is neither there on the first day nor there on the last day. Is it clear? Is it clear?
The second point is the asset there the first day and the first day is there, the last day is not there, then also you can take.
Yes. Yes. In the second point, there are two possibilities. The first, I'll again just erase this and tell you. That's the reason I read that in two part. Again, see. In case the qualifying asset does not appear in the balance sheet on the first day. Don't read ahead. What do you mean by this sentence? It means qualifying asset is not there on the first day. It means, is it there on the last day?
Maybe.
Yes, maybe not. It is there only, definitely. Yes, it is not there on the first day, because the sentence only says that the qualifying asset is not there on the first day, but it is there on the last day, right? Or both. Or both means what? It is neither there on the first day nor there on the last day. Both the possibilities are covered in point number 2 itself. Is it clear? In either of the case, you have to take half of the cost of the asset as your qualifying asset. Is it clear? Point number B. Now the third possibility is what? The third possibility is, in case the qualifying asset does not appear in the balance sheet on the last day. It means, is it there on the first day? Yes, it means it was there on 1st April, but not on 31st March, right? Why? Because maybe on 31st December or 31st January, the asset got what? Say na. Completed. It is no more a qualifying asset, right? It's a complete asset now. You can use it for your business, correct? That is also a possibility. So in that case, what are you supposed to do? Take the value of 1st April, okay? Take the value of 31st December and take average. Is it clear? Read that. Read point number 3. Is it clear? So again, I am speaking. When will you follow point number 1? When the qualifying asset was there on 1st April also, 31st March also. Take the average. When you will follow point number 2, in two circumstances, you will use point number 2. First, not there on the first day, maybe there on the last day, right? As said by Palani. And second, in point number 2, neither there on the first day nor there on the last day. Okay? It means it started in the current year and completed in the current year. When you will follow last point number 3, but it is appearing on the first day. Okay? So you have to take the average in that case. In either of the case, you have to find out in which case you fall. So in point number B1, B2, B3, there might be different answer depending upon the data which is given to you. A and C will remain consistent. Okay. A is your borrowing cost and C is your average of the total assets in the balance sheet. Okay. Last but not least, they have clarified over here very clearly. You can just read it once if you want, that once the asset is put to use, then you have no role to come to what? Please tell me. Then asset. You will directly go to what? The P&L account and take the deduction under section 36 subsection 1 clause 3, which I have told you yesterday also, that the deduction of interest is allowed under which section? 36(1)(3), right? So once the asset is put to use, you have to expense out in the P&L. Okay. So this is what this small ICDS is all about. Not very important, never ever asked in exam. Now let's go ahead. Pay attention, please, all of you. Yes, now you can ask Prashant.
Thank you.
Yeah.
I'm just trying to triangulate what we discussed yesterday to what we discussed today about the qualifying asset.
Right.
So all that we discussed today, is this in addition an additional qualification that we need to consider before capitalizing what we
No. It is just a procedure that how to capitalize the cost. There is no additional condition I am teaching you today. This ICDS is only telling you how to, what is the procedure to capitalize a cost. It does not, it is not talking about any additional condition.
If you can please open page number 2.5.
Okay. Of my textbook?
The summary,
the colored book. Okay. Page number 2.5. Yes.
On the top, the point number 3.
On the top, point number 3. Right.
So in short, till the time fixed asset is not put to use,
Okay.
capitalize the interest expense.
Okay.
This fixed asset has to be a qualifying asset, right?
Definitely. Definitely.
So today's condition is an addition to what
Right. Today we are doing some technical discussion of what we have done yesterday. Okay. Okay. Now pay attention, please, all of you. Some very important discussion that we are going to do today. And we are almost going to complete 99% of the depreciation discussion today. Pay attention, please, all. But before that, I would like to tell you one very important thing about depreciation, which is very much different as compared to your accounting standards and your financial reporting standards and your IFRS and your general accounting principles. Suppose I would like to ask you one question to all of you. Suppose on 1st of April 2023, I bought a furniture. Okay, the worth of the furniture is rupees 1 lakh. Okay. Now we all know that the furniture is depreciated at 10%. Okay. I purchased this furniture and I also started using it. Okay. For the purpose of my business and profession. I'm using it for my business. Okay. Now my question to you all is, suppose if I sell this furniture on 25th of March 2023. Okay. Then in the financial year 2023-24, that is for this financial year, how much depreciation I'm going to get? Okay, that is my question to you all. All the data is there on the board. You have to tell me how much depreciation I'm going to get. Yes, Vignesh, correct.
Yes, it is not there in the last year of the previous year, so there is no depreciation.
So, Palani, I'm not going to get any depreciation in this case.
Sure, sir. Yes, sir.
Prashant, no depreciation.
Yeah, I mean, if this is the only asset.
Yeah, this is the only asset. There is no other asset. Okay. So, am I going to get the depreciation? The answer is no.
Sir, that is 25, 24, sir.
Sorry, this is 24. This is 24. Sorry. So, the depreciation is 0. The very reason is because the asset is not there in the block on the last day. One of the primary condition to claim depreciation is that the asset should be there in the books of accounts or in your block on the last day, right or not? The quantity cannot become 0, right?
Quantity or the price cannot be.
The price cannot be negative, right? So it's such a strange thing under the income tax law that a person is buying an asset, using it for business for almost 360 days in a year, and then suddenly selling in the last week of the year, still is not able to claim what? Any depreciation. Therefore, the moral of the story, listen carefully. This is the truth. This is how it works. Whether you feel good, whether you feel bad, whether you feel correct, whether you feel incorrect, this is the law. Pay attention, please. Therefore, we can say, we can conclude, and henceforth, we are going to always remember this till the time there is no amendment in the income tax law. That can I say that under the income tax law, we do not get depreciation in the year of sale? Can I say that?
Yes, sir.
In the year of sale, don't ask for depreciation. Please keep this particular thing in your mind because this is going to help us to understand the next concept. Pay absolute attention now. Pay attention over here, all of you. We have started with the discussion of actual cost yesterday. Actual cost is defined in section 43(1), as we all know that. Okay. Now pay absolute attention. Now below actual cost, the definition of actual cost, there are around 15 to 16 explanations. I don't know, I have mentioned about this yesterday or not. that there are 15 to 16 yes, there are 15 to 16 explanations below the definition of actual cost. Now, what is the reason behind bringing this explanation? There are three motives behind bringing these explanations. Once you will be done with all the explanations, you will come to know the motive is either of the three. First motive is to give benefit to the assessee. The government has brought certain explanations to give you benefit. Because you are engaged in business, you are doing good thing. Business is a very good thing for the economy. Therefore, it's a reward from the government of India. Second thing is to reduce tax evasion. Because the assessee is trying to evade tax. Therefore, to reduce tax evasion, this particular thing has been brought by the government of India. Third thing, pay attention please, is to clarify certain doubts. Therefore, when we are going to complete this 15 to 16 explanations, we are not going to complete all of them today, but we are going to complete around 9 to 10 of the explanations today, and the rest balance 5 to 6 explanations will be done in the later topics like capital gains, etc., etc. It is related to certain other concepts of capital gains, but at least 9 to 10 explanations we are going to address today. So what are these explanations? These explanations, listen carefully. Before I start with the actual cost explanation, I need to give this introduction to you all. These explanations are nothing but giving you actual cost in certain special cases. What is actual cost by default? It is the actual cost, right, to the assessee as reduced by some portion which is meant by any person or authority, right? But in these 15-16 cases, actual cost will be in fact something else only. Actual cost will be something, it will be something else only. Okay. Why something else? It is not actual. So we can say now in these 15-16 cases, listen carefully my sentence, that actual cost is no more actual now. Actual cost is no more actual. It is something else only. Shall I start? Shall I start? To clarify certain doubts, they have brought certain explanations. The entire reason of bringing this 15 to 16 explanation is these three reasons. Either to give benefit to assessee, they are changing the definition of actual cost. Either to reduce tax evasion, they are changing the definition of actual cost. Either to clarify certain doubts in the minds of the assessee, they are likewise, we have seen yesterday, explanation 8 to 43(1), that once the asset is put to use, you cannot take that interest to the cost of asset. That was just to clarify doubt only, na? Because once the asset is put to use, where will the interest go after that? It has to go to the P&L account, right? It cannot go to balance, it cannot go to the asset account, right? So that was just to clarify one of the doubts which can be there in the mind of the assessee. Okay. So shall I start with the discussion? Please tell me. So the very first explanation which I am discussing today is explanation 2. Pay attention on the board. I'll be reading from the book in a while. And there are examples below every provision over there. Okay. Pay attention over here, please, all of you. The very first explanation is explanation 2, which we are discussing. In reality, in the order of the law, there is one explanation 1 also, explanation 1A also. But I am ignoring that as of now. I'll be dealing with them with the later topics, that is capital gains, etc. Pay attention on the board, please, all of you. I am Mr. A. Okay. And there is Prashant over here. And Prashant has gifted me some asset. Gifted a computer to me. Okay. Or I have got a computer in inheritance. Okay. From my grandparents or parents. Okay. Now I wish to use this computer. For what? For my, complete the sentence. For business or profession. Otherwise, we will not be in this chapter. Okay. I have to use it for business. So how I have received this? What is the source of this particular computer? Either it is received in the form of a gift or it is received in the form of an inheritance. So my question to you all is, in real terms, what is the actual cost? No, what is the actual cost to me in real terms? It is zero, na? In reality, though, it is zero only, na? If somebody gift you something, the cost to you is zero only, na? But the government is saying In such cases, actual cost is not actual. It is something, say na, it is something else. Let's see what is that something else. Shall we? So you can come to page number 2.13, all of you please. Explanation 2. Shall I say? Asset acquired by way of what? Gift, or by way of what? Inheritance. Is it clear? What will be the actual cost? Actual cost to the previous owner. That is actual cost to Prashant. Okay? Because Prashant is my previous owner now. Arey Palani, yes or no?
Yes, sir.
Actual cost to previous owner minus depreciation actually allowed to Prashant. So can I say in simple words, in this case, the actual cost to me is not zero. It is WDB in the hands of Prashant.
Yes, sir.
Can I say that?
Yes, sir.
So now there is one illustration below. You can just go through that illustration. That how the actual cost will be determined in case of what?
Gift or inheritance.
Gift and inheritance. Is it clear? Just check it once.
So if I were not using it for my business and no depreciation was actually allowed,
Okay.
even though I use it, but I don't have any BPV, but then I gifted it to you, and that is
In that case, entire cost will become my actual cost.
so it's not actually allowed to me because I don't have, even though it's used, but I've not utilized.
Right. Just go through this illustration. So how the actual cost will be determined in this case? Who is giving the gift? X. So we have to determine actual cost in whose hands? No. We are determining actual cost for whom? We are determining for Y, right? So what will be the actual cost in the hands of Y? The actual cost in the hands of X. That is 1 lakh. Right? Right or not? Minus depreciation actually allowed to X. Right?
Yes, sir.
So in the first year, when did X purchase it? In 19. So the first year is 18-19, right? But that was purchased in 2019 February. So it will be only 7.5, right? Less than 180 days, correct?
Yes, sir.
Second year 15%, third year 15%, fourth year 15%, fifth year 15%, and when, in which year the asset was gifted? 23-24 it was gifted, right? On this date, right? So 23-24 we will not take the depreciation because in the year of transfer we do not get the depreciation. Is it clear?
Yes, sir.
And that is the reason we are restricting ourselves till 21, 20, 22, 23. Is it clear?
Yes, sir.
And this will be the actual cost in the hands of Y. I hope it is clear to all of you.
Yes, sir.
Okay. So this explanation is denying the actual definition of actual cost. Yes or no? In reality, what is actual cost? Actual cost means actual cost. In reality, what is the actual cost in the hands of Y? It is zero, but the government is still giving you benefit. Government saying, if you are taking gift from someone and using that asset for business, we will give you benefit because you are using for business. If you are using for business, that is good for economy. You might generate employment for few people. You might do some production with the help of that asset. Whatever it is, any kind of business might help the country, might help the people of this country. Even if every person is employing one person, okay, every person is even employing one person, that is also going to be a huge amount of chunk in this country because the population is so huge. Therefore, any kind of business you do, government is always there to help you. Okay. So that is the reason I told you, one of the reason why this 15-16 explanation has come is to give you benefits. Is it clear to everyone?
Sir, I doubt, sir.
Yeah.
Sir, for why is it depreciation at 50% or full year depreciation?
For why it will be 50%? Because why is receiving the asset in the month of December.
Oh,
Okay. Because why will say that I have got the asset on December, right? So for Y in the current year, it is less than 180 days. If Y would have received the asset before 5th October, okay, then Y could have claimed 100% depreciation. Is it clear? Okay. Now, let me go ahead with the next explanation, which is a beautiful one now. Beautiful explanation. Huh? Just try to see what assessees are doing over here. Huh? Suppose I am standing over here. Listen carefully. I am Mr. A. Just try to see. It's a very dangerous tax evasion. Please see here on the board. Please, all of you. Then you can read it from your book if you want. But try to understand from the board first of all. There is Mr. A over here. I am Mr. A. For example, I am Mr. A. And I am into business, PGBP. I also have some capital loss. Okay, I have some capital loss of some amount. Okay. I have a very old AC with me. Very old AC. Very old AC. The WDV of that AC is say is just 20,000 rupees. Okay. How much is the WDV of that AC? It is just 20,000 rupees. It's an old AC, very old AC, which I have purchased for say 1 lakh rupees few years back. Now the WDV is only 20,000. See the facts, huh? What exactly I am trying to do. I am a PGBP assessee. I have some capital loss. I have some capital loss of say around 12 lakhs. How it occurred? Obviously, I might have done some transaction in past because of which there is some loss which is there with me. Okay. Is it clear? Shall I go ahead? I'm just putting some facts in front of you. Now, Mr. Vignesh is my friend. He is my close friend. He is also doing PGBP. Listen carefully how I am manipulating the law now. He is also doing PGBP, right? Now, I said Mr. Vignesh that let's do tax evasion. How? I am selling this old AC to Mr. Vignesh. For rupees 10 lakhs. For how much I am selling? For 10 lakh rupees. Obviously, why the hell Vignesh will buy such AC from me for 10 lakh rupees? Will he buy?
no.
Why he will buy an old AC which is 5-year-old, which is not even worth 50,000 rupees today? Why the hell he will buy for 10 lakh rupees? He will not buy. Obviously, I am explaining Vignesh that it's not that easy to understand this complex issue. Therefore, I am telling Vignesh that I am not trying to fool you. Don't worry, Vignesh. Understand my entire modus operandi. Then you will appreciate what I am trying to do. I am telling Vignesh that you buy this AC from me for 10 lakh rupees. Okay. And you pay me what? Obviously, if he is buying me for 10 lakhs, he has to pay me how much? He has to pay 10 lakh by check, right? Yes or no? You pay me 10 lakh. Vignesh will say, why the hell I'll pay you, sir? For such an old AC? What is the benefit which is going to be derived by me because of this transaction? My 10 lakh rupees are getting wiped out from here. I said, just wait, Vignesh. After that, I'll give you cash. Don't worry. Okay. I'll give you cash of what? 9,70,000 maybe. Okay. So effectively this asset cost Vignesh how much? How much it cost him?
30,000.
Only 30,000. Na? It cost his pocket only 30,000, right? Arey say na please. Now, what are the advantages over here in this transaction? Mr. Vignesh will be able to capitalize the asset at what?
10 lakhs.
10 lakh. And he will depreciate asset at what? 10 lakh 15%. Is it clear? Is it clear till here? Then I will go ahead, Palani.
Yes, sir.
Okay. How much the asset has effectively costed Vignesh? 30,000 rupees, because he has paid 10 lakh, but he has got 9.7 lakh in cash that he will use it for some personal purpose. No doubt his white money is got converted into black money. Yes or no? He had 10 lakh of white that got converted into black, but he can use that money for many purpose. He can go to restaurant, he can buy certain clothes. Anyways, people buy all these things now for their day-to-day life. You can do these things from your black money now. Why to use your white money for all those luxury purposes? Yes or no? You can buy watches, you can buy clothes. You cannot go to foreign trip. They will take TCS from you. That you cannot do, right? Right now, you cannot go to foreign trip. You can roam in India at least. In India, if you roam, nobody is going to take TCS, right? A lot of things will come to our mind. So I have to be clear from every angle. Okay. So is Mr. Vignesh is at benefit?
Yes, sir.
He will be depreciating the asset at 10 lakh rupees, and over the years he will be saving 3 lakh rupees as tax, right?
Yes, sir.
Now let's talk about Mr. A also. Mr. A will be under a problem now. Why? Is Mr. A transferring an old asset, so he will be liable for capital gains?
Yes, sir.
Mr. A is also very smart. He is doing so because he already has a capital loss of 12 lakh rupees. Whatever capital gain will come, he will set off with that, and he will also not pay any tax. Anyways, this was about to expire in the next 2-3 years. Are you able to understand that? Now to help Mr. Vignesh, I will not pay tax. That doesn't make sense. I will also not pay tax. Why? Because let's compute capital gains for Mr. A. Mr. A will be liable for capital gains or not for sale of asset?
Short-term.
Short-term capital gains as per block method, right? Sale consideration is how much? 10 lakh, right? Officially, though we are selling for 10 lakh only. Na? Government does not know we are doing this tax planning. Government will come into picture in a while, right? Minus, in case of block of asset, what we compare? We compare cost or WDV? Directly the WDV is compared with the selling price, right? The WDV is hardly 20,000, right? Therefore, the 9.8 lakh will come to us for short-term capital gain.
Yes, sir.
And this short-term capital gains, I would be liable for 30% tax. But I am very smart. I will do this transaction only if I have such kind of short-term capital losses with me. Are you able to understand that? And I will set off this 9.8 lakhs and I will not be liable for any capital gains. Are you understanding? So if Mr. A does not have a short-term capital loss, then he should not do such kind of things. Then to give benefit to somebody else, you have to pay tax. That cannot be done. That doesn't make sense also. So if I have a loss, which I feel that it is going to be expired in next 1 or 2 years, because it has a time limit of 8 years. And it has been said it is 5-year-old loss, 6 years old loss. In next 2 years, it is going to be expired. So I will find a friend like Vignesh. And I will tell him that I will sell you this asset at a higher price. Then you pay me the check. I will give you cash. You can use the cash at some other place if you want to save tax. And you will be able to depreciate the asset at what? Say na, 10 lakh rupees. Now, obviously, when Mr. Vignesh assessment will be done, whose assessment will be done? Mr. Vignesh assessment will be done. The assessing officer will look at this transaction. Will he call for the invoice of the asset? Yes, he will ask for the invoice of the fixed asset. He will see an air condition, that too second hand, which is 10 lakh rupees. Will he believe? Will he believe that?
No.
He won't believe. But what will he do? What can he do? Can he do anything to me?
No, sir.
Can he decide at what price I can buy the things in the market from an unrelated party? We are both from related party he can decide. Yes or no? There are provisions which says that from related party you cannot pay more money, etc. Have you heard about that provision or not? But likewise, like this, so everybody will evade taxes. Yes or no? Everybody will evade taxes. So what to do? So to stop such practice by Mr. Vignesh, the Government of India came up with explanation 3 to section 43(1). Shall I read? Shall I? Just link with this example. Asset acquired at a higher price. Is it? From any other person using the asset for his business and profession. Why? With a view to claim depreciation on enhanced cost. Is it? And reduce tax liability. Is it? In such case, the actual cost to be determined by the assessing officer with what? The prior approval of joint commissioner. If government has given power to the assessing officer that if he finds such transactions during assessment, then he can go to whom? He does not have suo motu power. He has to take an approval from whom? The higher authority, that is joint commissioner. For example, during Vignesh assessment, the assessing officer came across this transaction of 10 lakh rupees AC. So the assessing officer went to joint commissioner and explained the situation to joint commissioner. Joint commissioner said that I give you the power. And then assessing officer will determine what? The value, the correct value of that asset. Are you clear? And suppose the assessing officer says that the correct value, see on the board please, Vignesh. Palani, sorry. Palani, see on the board please. Just a second. I'm concluding this discussion. Now suppose, does the assessing officer has the power to change this value? Yes. Where it is given? It is given in which provision? In explanation 3 to section 43(1), right? The government has given him power. And suppose the assessing officer says that the actual cost, that is the fair market value of this asset, is hardly 50,000 rupees. It is not more than that. So are you supposed to reverse the depreciation on 9.5 lakh? Please tell me. Will he add back the depreciation on 9.5 lakh? And will he charge tax on that? Will he charge interest on that? Will he charge penalty on that or not for tax evasion? Now there is one very important catch over here. Is the assessing officer reducing your actual cost from a very big amount to a very small amount? That is from 10 lakh to 50,000. He has that power. He has that power. You cannot inflate your actual cost. You cannot inflate your actual cost and take depreciation on any amount. If there would have been a marginal difference, I will not raise any question. If the worth of the AC is 20,000, you are purchasing for 35,000, or 20,000 you are purchasing for 40,000, then it is fine. The worth of the AC is not even 50,000, you are buying for 10 lakh rupees. You are trying to fool whom? Now just try to see what the department wants to say and listen carefully. The last point, that's it. The government says that the AO has the power to change the actual cost. Obviously on the lower side only. He will not further increase. Now, obvious, that's very obvious. He cannot increase that to 15 lakh. Na? He will reduce only. Na? He will not increase because already your cost is very high. Right or not? Has he reduced your cost from 10,000 to 50,000, 10 lakh to 50,000 rupees? Has he reduced by 9.5 lakh? But at the same time, listen carefully. The government says that the seller should not shout and say that my selling price is also 50,000. Are you able to understand? The seller will continue to compute capital gains, assuming that his selling price is how much? His selling price is how much? It is 10 lakh only. Otherwise, seller will also shout now. You have changed the actual cost of Vignesh. You should change my selling price also and make my selling price as how much? Please tell me. Tell me na. 50,000. What is my WDV? 20,000. Therefore, what should be my capital gain? Only 30,000 instead of. And therefore, I will only use what? 30,000 of my loss and keep the balance loss with me. Yes or no? You cannot say this. Because this explanation is given in under which section? Under the definition of actual cost, right? And the actual cost definition is applicable to whom? It is applicable to seller or buyer. Therefore, buyer will change its actual cost, but seller will not change its selling price. I don't know whether you got this point or not. In Hindi, we say this as ek teer do nishan. I don't know whether you understood this or not. Arey, did you understand? The seller will also say, na, if you are changing the cost of the buyer from 10 lakh to 50,000, you should change my selling price also from 10 lakh to 50,000. Yes or no? But the government will say there is no corresponding change in capital gains provisions. The provision only speaks about definition of actual cost, and actual cost is relevant for buyer, not to seller. Arey, are you understanding? So this entire example is given over here. In practical life, how it will be useful? The moment assessing officer of buyer see any asset which he feels that it is overinflated, it is much higher than the price at which I could have got it easily in the market, then he will invoke explanation 3. Are you clear? They will even understand that there might be a hidden arrangement between the buyer and the seller, and generally this will happen in case of what? In case of second hand assets, generally, because the showroom person will not do such activities with us, na. Suppose if I go to an electronic shop, which is a showroom, say Chroma Electronics, or if I go to a mall person will not do such activity with me, right or not? Such activities will be done with something who is known to you, maybe who is not a relative, but not lesser than relative also, maybe a very close friend. Yes or no? So this is what this arrangement is all about. Let's go through this example. You can go through this example if you want. I will go with you all, and then you all can also go through it once. Okay, Mr. X over here is the seller. Shall I read? He has opening WDV of asset 10 lakh. Okay. PGBP before depreciation is 4 lakh. Mr. X is also doing PGBP. Y is also doing PGBP. Now, Mr. X has lot of business loss of 1 crore 20 lakh rupees business loss he has. Now, Mr. X sells the entire block for 1 crore 30 lakhs. Okay. He sells for how much? What is the WDV of the block?
10 lakhs.
He's selling for how much?
1.3 crores.
Therefore, his short-term capital gains will be 1.2 crore, correct?
Yes, sir.
But he is not worried about such a big amount of gain also. Why? Because he has a broad forward loss, he will set off, and his capital gain will become nil, right?
Yes, sir.
And Mr. X has squared his capital gains, right? Now he is not liable. He will only be liable to pay tax on his PGBP income, right?
Yes, sir.
Now let's go to Mr. Y. Shall I? Mr. Y has PGBP of 50 lakhs and opening WDV of 20 lakhs, okay, of plant and machinery, because it is 15% depreciation. Now, Mr. Y's PGBP is 50 lakhs. Now, Mr. Y is purchasing asset of 1 crore 30 lakhs. Yes or no? So, 20 lakhs is the opening WDV, 1 crore 30 lakhs is purchased from Y, what? X, correct? So, this is the actual price at which he has bought it. Now, assessing officer will come into picture in a while. Don't worry. We are not going to give him benefit of 1 crore 30 lakhs. Therefore, he will claim depreciation of 22 lakh 50 on 1.5 crore. Okay, shall I go ahead? Now, during assessment, the AO is invoking explanation 3 and saying that, no, I do not accept 1.3 crore as your purchase price. I consider it to be only 15 lakhs. Is it clear?
Yes, sir.
And therefore, he will recompute your entire capital, entire PGBP depreciation. 20 plus just 15, not 1.3 CR. Is it clear? And therefore, your total income is recomputed to 4475. See how much is the income increasing? Can you see this? Around 15-16 lakhs the income is increasing because of change in depreciation. Can you see this? At the same time, will the seller be able to change his short-term capital gain amount?
No.
No. Last line. The sale consideration of X will not change because of explanation 3. I hope everybody is crystal clear with this provision. Okay. Now, I would like to just ask you, Vignesh and Palani, I will not ask to Prashant. I will ask to both of you. Have you done all these things in CA Inter also? It was there in your syllabus for your kind information. Yes or no, Vignesh? All these explanations, I will not ask Prashant because Prashant would have done long back. I would not ask him. But you guys have done in the recent years only, maybe in the last 2-3 years. So it was all these explanations. Now all these 15-16 explanations were there in CA Inter also for your kind information. It was there in Inter CA also in the chapter of business and profession. Nevertheless, you might have done it also, but you would have not done with the logic of the provisions, right? So shall we go ahead with the next explanation? Okay. So this explanation was Brought for what purpose? The three purpose which I have written above. To reduce tax evasion, right? Otherwise, tax evasion would have been very easy for the buyers. Now, pay attention, please, all of you. Next one, please pay attention. See here. I am Mr. A. I bought a furniture of 1 lakh rupees. Furniture is depreciated at 10%. We all know that. This is previous year 1920. Now, after 2 years, that is after 1920, 2021, that is in previous year 21, 22, I sold this to Mr. B. Say for rupees 1.1 lakh 20,000. Okay. Am I selling for a very great difference? No, I am not selling for a very, I am not selling a 1 lakh asset, 1 lakh rupee asset for 10 lakh rupees. Okay. If I do that, Mr. B will be in trouble. Yes or no? Will he be in trouble or not? Because of what? Explanation 3, right? I don't want to do that. I am playing some other game only. See what exactly I am doing. Now, Mr. B is selling to Mr. C in previous year 22-23. Sold to Mr. C for rupees 1.4 lakhs. Okay. Okay. Again, I am not doing a transaction at such an amount where the department can have any kind of doubts. Okay. I am not varying the amount to a great extent. I am varying the amount maybe marginally by 10-20%, not more than that. Okay. Shall I go ahead? Then I reacquire the asset. I what? Reacquire the asset in financial year 23-24 for rupees 1.6 lakhs. Okay. So now, in reality, what is the actual cost in 23-24? What is the actual cost in 23-24?
1.6.
It's 1.6, right? Are actual cost means actual cost, na? Are asset which is once sold by you, then sold by somebody else, and then you are buying, then it is a new asset only, na, for you. Reality, what is the actual cost? It is 1.6 lakhs. But the government says no. Don't try to make such kind of loop in front of us. Okay. We will not tolerate such kind of loops. Explanation 4 was inserted. Asset once belonged to us, is it? Is it once belonged to us?
Yes, sir.
Which was used by him for business and is transferred. Are we transferring?
Yes.
And then reacquired by him. Are we reacquiring? Then the actual cost will be what? See right hand side. WDB at the time of original transfer. It means what?
1 lakh.
No, 1 lakh was not the WDB at the time of original transfer. 1 lakh was the original cost. What will be the WDB at the time of original transfer? Can you please compute me without using calculator, please? There is no need for a calculator for this. 81,000, right? Because you are selling after 2 years, right? So WDB at the end of after 2 years, it is 81,000. Or the price paid for reacquiring the asset. How much price we are paying for reacquiring the asset?
1.6.
Whichever is less will be your actual cost. Okay. We are not going to tolerate that you just make a loop and then inflate the actual cost. And then again depreciate the same asset at 1.6 lakhs. Are you able to understand or not? So we will consider your WDB at the time of original transfer or reacquisition price, whichever is higher. But here the entire job is of department. The department has to work very hard to trace such transactions. No assess is going to himself say that I am making a loop. It is the duty of the department or not to trace such transactions. That once the asset was there with assessee, then it was sold to B, then C, then D again sold to us. Yes or no? It is the duty of the assessing officer or not? So it's a matter of tracing. It's not that easy to trace such transactions. Okay. So if they are able to trace it, if the amount is big, they might trace it. If the amount is small, they are not interested. Okay. You can just go through the illustration below, please, once. Okay? Yeah, please.
So the depreciation allowed by B and C will not be reduced from.
No. No.
So it will just be A's depreciation.
Yeah. Whatever the subsequent parties have done, we are not interested in that.
So to that extent, the group of SSEs can enjoy extra.
Yeah, they can enjoy the extra benefits. Yes.
In that case, could the assessing officer also invoke?
Explanation 3. Yes, definitely.
So
If he feels that B is buying at more than fair market value, he can invoke explanation 3.
and all those 3 years of extra depreciation that B and C
Yes.
have enjoyed. So
Yes.
instead of going 4, he can come to 3.
Yes, definitely.
The approval of the commissioner, the joint commissioner.
Joint commissioner, yes, he can do so. In case of B and C, definitely explanation 3 can be invoked. Okay.
Even in case of A, let's say B and C enjoyed depreciation for 3-4 years, and then they sold back to A.
Okay.
So
no, then explanation 4 will be applicable, because explanation 4 is specific to this case and explanation 3 is general, and between a general provision and a specific provision will always prevail. Okay. Then we will not apply explanation 3 in such case. Shall I go ahead? Now pay attention please. Another tax planning strategy. See on the board. There is one person by the name called as Mr. A. Listen carefully. Yeah? He has purchased a furniture of 1 lakh rupees, which is depreciable at 10%. He has used for 2 years for business. And then after that, he sold this furniture to Mr. B for rupees, say 1.2 lakhs. Okay. Okay. Now what is the duty of Mr. B? If he has purchased the furniture, he should use for his business. After purchasing the furniture from Mr. A, what Mr. B is doing? He is leasing back this particular furniture to Mr. A. Okay. So that means the furniture has again come back to whom? Please tell me. Again come back to Mr. A, and Mr. A is enjoying that furniture the way he was enjoying earlier. Yes, it's just the ownership has changed. Correct? Yes or no? The ownership is changed. Earlier the owner was who? A. Now the owner is who? B, and he is leasing that asset to Mr. A. Now listen carefully. Why they have done so? Assuming that this transaction would have not happened, okay, then there would have been only one party. Which is that party? That is Mr. A. And he would have continued to enjoy depreciation on what? The WDV of the block of asset. What would be the WDV of the asset after 2 years? It will be around 81,000 rupees, right? Yes or no? Now, what is he trying to do? He is trying to take benefit himself also, and he is also giving benefit to his friend also. Mr. B, his friend only. Okay. He is not any other person. What he is telling Mr. B, Array, I will sell you na at asset at 1.2 lakhs. We will not sell at a very high price. We will sell at a marginally high price. And you buy this asset for 1.2 lakhs from me. Okay. And then you enjoy depreciation on 1.2 lakhs. And then I will pay you what? Obviously the lease rentals. Yes or no? And I will enjoy what? The deduction of lease rentals. Array, yes or no? So one transaction where, listen carefully, after 2 years, listen, just compare the two possibilities. One transaction, the initial one, if this would have not been done, what would have been the only tax benefit over here? Depreciation on 81,000 to Mr. A, right? But now because of this particular transaction, Mr. B will get depreciation on 1.2 lakhs. Mr. A will get lease rental deduction. Overall, there will be loss to the government or not? Yes or no? So the government said that, wait. What will be the actual cost in your case? The actual cost will be determined by explanation 4A. What will be the actual cost? Read. Explanation 4A. Asset acquired by an assessee. From whom? Another person who had claimed depreciation. So let me know the person from whom I am buying the asset. Is he claiming the depreciation? The person from whom I am buying the asset, is he claiming the depreciation or not? On such asset, and the asset is leased back to such other person, then what will be the actual cost? Will it be 1.2 lakhs? The answer is no. In that case, the actual cost in the hands of the buyer will be WDV of the asset to the transferor. Who is the transferor? Please tell me over here. WDV in the hands of, please say, in the hands of transferor. Who is transferor? Who is transferring the asset? A. That is how much? 81,000 rupees. Is it clear to all of you? You are not going to get 1.2 lakhs. Is it clear? Is it clear? So just write down this example. This example is not there over there. If you have books, hard copy books, you can write down there itself. If you don't have a hard copy book, just write down in your notebook somewhere, please. And you can, when you are writing something, just make sure that you give a reference of the book page number also. Otherwise, you will be able to not search on the day of exam. Yeah. Shall I write down the page number here? Yeah, I will just write down. I will write down the page number of the textbook also and also of the color book. Okay. 2.14 of textbook. Just a second. And in color book, the same provision is there on 2.6. Explanation 4A. Okay. 2.6 of color book. Done? Done. Now, let's go ahead with the next explanation. Now, the explanation from here onwards are very simple. These three explanations in between 3, 4 and 4A were slightly technical in nature. Rest of them are very straightforward. Like the next one is a very straightforward explanation. Pay attention on the board, please. Suppose I am Mr. A and I am a CA student, and I told my father, listen carefully, that I want a laptop. I want what? A laptop. So my father bought a laptop for me. Or say I bought a laptop from my pocket, from my article chip money, so that I can watch my lectures, I can do my office work also in that. Okay. So I am a CA interqualified student. Listen carefully now. Vignesh, where are you? Now this is, say for example, 2023, 2024. Now in 2024, 25, again I am a CA student. I am doing my studies, I am doing my articleship. In 2025, 2026, again I am a CA student. In 2026, 2027, again I am a CA student. You know that a CA student remains student for a very longer period of time, right? I am not telling you, Prashant. Don't worry. This this is my general example which I have been giving since last 10 years. So finally, say in financial year 2027, 2028, he became what? A chartered accountant. Okay. So now the question is, after becoming a chartered accountant, what is he doing? Suppose he wishes to become a practicing chartered accountant. He doesn't want to do a job. He wants to set up his small office and he will do his office work over there. He will try to start with his own setup. Now, for that purpose, he is thinking that to start my own setup, I need capital to buy assets. I need a small office. I need certain other assets as well. Then I need a laptop also. So he thought that he will use the same laptop which he was using for his CA journey. Okay. So now this laptop which was used till now for what purpose? Personal purpose. Now after becoming a chartered accountant, this laptop is used for what purpose? Please say. It is used for what purpose? Business and profession purpose, right? So now the question is, will he be eligible to claim depreciation on this laptop? Please tell me.
Yes, sir.
So he will be eligible to, because he is using the asset for the purpose of business and profession and he owns the asset, right? So now the question is, what will be the real question? Actual cost. Okay. What will be the actual cost of such asset which is converted from your personal use to your business or professional use? What do you feel? What will be the actual cost in such case? Okay. Palani, what should be the actual cost? It should be written, na, like that somewhere if you are saying so, Palani.
Sir, I've read it somewhere, sir.
You have read it somewhere. Where you have read it? In academic life or in practical life you have read it? Academic life you have read it somewhere. Okay. And the answer is, the actual cost of such asset will remain actual cost only. It means it will remain how much? It will remain 50,000. Okay. We are not supposed to do such kind of exercise of computing a WDV and all those tedious exercise is not relevant, is not worthy also to give so much of time to do such things. Therefore, my question to you, my discussion is going to continue now further. I have not completed the discussion. Now, this logic is applicable to plant, machinery and furniture. It means if I convert my personal plant into a business plant, or a personal machinery into a business machinery, or a personal furniture into a business furniture, then this logic is applicable. That actual cost will remain actual cost only. It will not change. Okay. Are you clear? What if I convert what is left then? What is left? Building is not mentioned over here. Okay. For building, the government is trying to tell you a special provision. The reason is very simple. Out of all the assets, in 9 out of 10 cases, the building is going to be the most expensive one, right?
Yes, sir.
It's a superstructure. It can go in for thousands of crores as well, if valued properly. Therefore, if I convert my personal car into a business car, actual cost is actual cost. If I convert my, say for example, personal AC into a business AC, actual cost is actual cost. If I convert my personal chair into a business chair, actual cost is actual cost. Okay. Is it clear? But if I convert my personal building into a business building, then the government is telling you some provision. And that is where explanation 5 to section 43(1) come into picture. See here, please. This is exclusively for building. The Palani, you are saying that you have read this somewhere. You would have read in reference of building Palani, not in reference of plant machinery and furniture. You have definitely read somewhere it has to be WDV. You are correct. Palani initially said that it will, in such case, it will be WDV of the asset, which will be the actual cost. So I asked him, where have you heard this? He said that I've read somewhere, sir. So you would have read over here, but that is in reference of building, not in reference of plant machinery and furniture. So let's read. Building used for private purpose, subsequently brought into business use. See, what will be the actual cost? The cost of purchase or construction, it's an hopeless provision. Hopeless. The most hopeless provision of the entire income tax law is this one. Nobody is going to do such things, which is written over here in explanation 5. It doesn't make sense only. This section is, rather than giving benefit, it is providing some kind of harshness to us. Let me read and then I will explain you how. The cost of purchase or construction of building as reduced by the notional depreciation, calculated at the depreciation rate applicable to the year of conversion into business use. I want you all to just read it once and then I'll speak. Shall I? Now, suppose if I ask you a question, pay attention, based on what is written over here. I bought a building of, say, 100 lakhs in financial year 2015-16. Okay? For personal purpose. Okay? And then in financial year 2023-24, I converted that into business purpose. Okay? So what will be my actual cost in that case? 100 lakhs minus the depreciation for over the years, right? Now, while taking the depreciation, what shall be the rate that I should take? Which year's rate of depreciation I should take? Shall I take the rates of depreciation of respective years? 15, 16, 16, 17, 17, 18, 18, 19, 19, 20, 20, 21, 21, 22, 22, 23. Shall I take the depreciation of respective years or shall I take the depreciation rate of 23, 24? 23, 24. It is written very clearly, calculated at the depreciation rate applicable to the year of conversion to business use. Are you clear? So this is what this provision is all about. You can go through this example, but just listen to me once more. It's a hopeless provision. Why? For example, if I have bought a building around 20 years back or 25 years back, okay, for my personal purpose, the price of the building would have been much lower at that time, right or not? And today the price of building would have been around 5 times more than that. At least 5 times more than that, more than 5 times also, right? Now what they are saying, a building which was purchased 20 years back and now it is converted into business use, I should take the cost of 20 years back. And then I should first of all reduce 20 years depreciation from that. What will be left after that, yaar? What will be left after that? Will there be any amount left after that? It doesn't make any sense only to do such kind of things. Any person who does do such kind of things will be more at loss rather than benefits. Yes or no? Because the problem will come that that building will be forming part of the block then. And later on, if you sell that building, You will not get the indexation benefit also. You will not get the total cost benefit also. Yes or no? So it's a hopeless provision. Doesn't make sense in practical life. Nobody would do this and nobody should do also all these things that convert your personal building into a business building. Rather you sell your personal building, bring that capital in business, yes, and then buy a new business building. That would make more sense as far as taxability is considered. Did you understand what I said? Sell your personal building, put in business, bring that money as a capital or as a share capital in your company. You can do that now. You are free to do that. And then you can buy from business if you want to claim depreciation. You will get the total worth of depreciation deduction in that case. Not like this, that you have to reduce the depreciation over the years. Okay. Just go through this example. In the meanwhile, Prashant was asking something. Yes, please.
It's a silly clarification. When we're taking this value of this building or the cost of this building, first we have to remove the land price away and then only take the construction value of the building and then add the depreciation on the construction. Because the land will increase by a significant amount.
Right,
The
right,
construction cost will reduce, right?
right. Right. So where are you from, Prashant? Which city?
Basically from Rajasthan, Jodhpur.
So right now you are in Jodhpur?
No, right now in Goa.
Okay, right. So you stay in Goa only?
Actually, since we've come to India, we've been in Dharamshala for a couple of years in
Okay.
Ahmedabad, and now Goa. So,
Okay.
the whole point of coming to India is to improve our health.
Okay.
So, now we've gotten bored of the mountains. For 2 years, we're in the mountains.
So we have come to beaches.
The beaches,
Right.
but it's raining cats and dogs here.
Okay, okay.
Every day,
And Palani, you and Vignesh, you are from? Palani, you are from Chennai, right? And Vignesh, you are from?
Sir, I'm from West
Okay,
Bengal.
you are in Asansol right now. Okay. So you are doing articleship over there?
No, sir, I'm in work.
Okay. So now I have written a note below that for plant, machinery and furniture, you are not supposed to do all these things. Okay. For plant, machinery and furniture, because these are small assets, government is not much interested in them. For plant, machinery and furniture, your actual cost will remain what? Same only, will remain actual cost only. Now, let's go ahead with some more explanations. Now, there are some explanations we are keeping on hold as of now. We'll be doing with them with the capital gain chapter, like this one, this one, this one. These are the explanations we'll be taking up. Don't worry, you will forget. I will not forget all these things. Explanation 8 is something which we have done earlier only. Yes or no? Yesterday we have done with Challapalli Sugar Mills Limited. Yes. Once the asset is acquired and it is put to use, after that, whatever is the borrowing cost, that will not go to what? Actual cost. That will go to what? The P&L account. You can claim deduction under section 3613, right? So now the next explanation which is due in front of us is we have kept on hold certain explanations again and again. I am saying, don't worry about it. That is explanation 1 we have kept on hold, 1A we have kept on hold. Obviously, we are going to do all of them. In between, we have kept 2-3 explanations on hold. I have written on in the bracket also that you have to do this with the respective topics. Now the next explanation which I am talking about is as follows. Pay attention on the board, please, all of you. Pay attention. Suppose I buy a machinery worth rupees 10 lakhs. I bought this machinery. Now, when I bought this machinery, obviously the seller would have charged some kind of GST on that, right? Say 12% GST, for example. So the seller would have charged me 1,20,000 as GST, and therefore the total value would be to 11,20,000. So obviously I will pay to the seller how much? I will pay 11,20,000. Yes or no? Now the question over here is, what will be the actual cost for me? Okay. Will it be 11,20,000? Okay, this is one possibility, option 1. Or will it be 10 lakh rupees, option 2? Now the government says that whatever option you want to take, you can take. Okay, listen carefully. The government is giving free will to us. The government is saying that if you are taking the ITC benefit of this, what? GST credit. If you are taking input tax credit, GST credit of this, okay, then your actual cost will be 10 lakh. Is it clear? Because for GST, you are already taking benefit in GST loss. But if you are not taking the GST benefit, okay, if you are not taking, nobody would not take the GST benefit. It is just that you are not allowed to take the GST benefit in some cases, right or not? Like for example, if you buy a car, there is 28% GST on that. But the government does not give GST credit. It is blocked. It is a blocked item. So in that case, by default, I will claim depreciation on GST portion also. Yes or no? So given a choice, what is more beneficial? Taking GST credit is more beneficial or taking depreciation benefit is more beneficial? GST credit would always be more beneficial as compared to taking what? The benefit of depreciation. The reason is very simple. First of all, GST credit, you get it in one shot, right? Yes or no? You get it in one shot, once, and depreciation will be over the years, right? Secondly, in GST credit, you get the entire benefit of 1,20,000. In depreciation, you will get the depreciation of 1,20,000. I don't know you got the mathematics or not. Yes, you will get only the depreciation of that, and on that, the tax saved will be only 30%. Yes or no? The tax saved will be only 30% of 1,20,000 na. But in GST, your entire 1,20,000 GST output will be saved if you take the credit, right? Therefore, I am not getting into the finance of that. Okay, I am just telling the taxation perspective. I don't want to go into the which option is better, which is not. If you are allowed to take credit, then take. If you are not allowed to take credit, then go for depreciation. Okay, depreciation should be your second option. Like if you go for a hotel industry, and hotel industries, restaurants are not allowed to take credit, yeah, right? Because they come under composition schemes. Yes or no? So for them, if they buy any machineries, they have to take what? Depreciation, because they are not allowed to take depreciation. They are not allowed to take ITC benefits. Yes or no? So depending upon your GST position, you can take a call. Okay. So that is what the next explanation 9 is all about. There is a serious need of change of words over here by the government of India. They are still into their own mode only. Sandwide credit. I don't know what, in which world they stay. Central Excise Rules 1944. All these things were relevant before what? 2017. Yes or no? Now after GST, there need to be some change over here. Reference of GST has to come over here. But nevertheless, the intention is same only. Even in earlier laws, there was a GST credit, input credit. The credit concept is same only. So asset acquired subject to levy of excise duty or custom duty, in respect of which Sandwide credit is available, which is nothing but your GST credit, ITC. So much of the duty in respect of which a claim of credit has been made. If you have made the claim of credit, then that shall not form part of what? Please say. Actual cost. Even in indirect tax, you will learn this provision. Huh? An indirect tax teacher will give you reference of income tax section 32. they will also teach you this provision. Okay, but nevertheless, now you have done direct tax. I guess generally most of the students complete direct tax first and then they approach for indirect tax. So if you have done indirect tax, you would have known already that this is the case. Okay, is it clear? Shall I go ahead? Okay, let's go ahead with the next explanation. Now it is a big one now. It's a big one. It will take some time. There are a lot of discussions that I have to do over here. There are a lot of ICDS implications also which I have to say over here. Okay, pay attention please all of you. Explanation 10 has a deep discussion now. Pay absolute attention on the board please all of you. Okay, explanation 10 to section 43(1). See on the board please. There is an assessee, Mr. A. He wants to buy a plant and machinery of 100 crore. So he is going to the government and asking for some kind of relief, help, support. So the government said that we will give you subsidy of say 20 crores. Okay. So whatever subsidy the government is giving for this particular asset, we already know that what has to be done with that. When we read the definition of actual cost, we were aware of this particular treatment, right? Yes, we have to reduce this from the actual cost, right? And therefore the actual cost will come to how much? Please say 80 crores. This is something which is understood from the main section itself, because the main section indirectly gives this kind of hint to us, right? So now we are just doing detailing of that particular thing, detailing, because main section does not give detailing of what exactly it is meant by any person, any portion which is made by any person or authority. So we are trying to do detailing of that particular paragraph. Okay, so I am just reading this paragraph from left hand side, step by step. A portion of cost of asset acquired is made directly or indirectly by government or any statutory authority or any other person in the form of what? In the form of, repeat the words, in the form of what? How the government is supporting you? Please tell me. They are supporting you in the form of subsidy or grant or reimbursement. Now, just remember these three words. You have to keep these three words in your mind, that these three words are used in explanation 10. These, you cannot generalize these three words. These three are very important words. So my question to you all is, what is the difference between subsidy, grant and reimbursement? All of them are assistance in the form of in the form of some or the other way by the government or by any person or any authority. But what is the literal meaning of these terms, these three terms? What do I mean by subsidy? What do I mean by grant? What do I mean by reimbursement? If all of them are exactly similar to each other, then there is no need to write them over here three times, right or not? The moment the government is writing them separately, there is a difference in their meaning in practical life. Please tell me what is the difference between the three terms, or even though all three of them are not defined under the income tax law, so you have to explain as per your general terminology. Please tell me.
Subsidy is a direct reduction from the cost of an asset.
Yes, subsidy is something, I'll just repeat that what you said, Prashant, to rest of the people. Subsidy is something which is a direct benefit, means you went to government and said that I want an asset of 100 crore. The government said that don't worry, we will make you buy at 80 crores. Okay. So the government is directly allowing you what? The government is directly talking to the seller and saying to the seller that give this asset to this person at 80 crore, we will pay you 20 crore. Is it clear? So we will subsidize the asset. Yes or no? Is it clear? So the government is subsidizing the asset. Now what is grant?
Grant is, I think, you provide in cash.
Yes, that's it. Correct, Prashant. I'll again interrupt you. Grant is the assessee is again coming to government and saying that I want to buy an asset. So the government is saying, wait, we will give you 20 crores and you can buy the asset at whatever cost you want to. So when you give the cash assistance to someone, so in this case, the government is not helping the assessee to buy the asset, but directly giving the benefit in the hands of the assessee. Is it clear? That is grant. And what is the third one? Reimbursement is very simple. The government will tell you, go and buy the asset, show us the proof, and we will what? Reimburse you some of the portion of the cost of asset. Is it clear? So in subsidy, your outflows is only 80 crores. In grant, You get 20 crore and then you do outflow of 100 crore, right? And in reimbursement, you first incur 100 crore and then you get 20 crore. Are you clear? In either of the case, your effective cost is going to be 80 crore only. Correct? Yes or no? So this is the first part of the discussion. So that's what the government also says on the right hand side. So much of the cost as is relatable to such subsidy, grant or reimbursement shall not form part of what? Actual cost. It means subsidy, grant and reimbursement shall be removed from actual cost. Okay. Now, let's move on to the second part of this particular explanation. Pay attention on the board, please. Now, suppose there is government over here and there is an assessee over here, Mr. A. Listen carefully. Now, this assessee wants to start with a project, a big project where he is going to buy a group of assets. There are a lot of assets he is going to buy. Okay. The project cost is approximately 120 crores. In which he is going to buy plant and machinery, he is going to buy furniture, he is going to buy building also. Okay. Now, suppose he is buying plant and machinery of 60 crores, furniture of 20 crore and building of 40 crore. Okay. So, now the difference between this example and this example is very clear. That right hand side example, you are not intending to buy one asset, but you are intending to buy group of assets. Okay. You are intending to invest in a big project which involves lot of assets, not one asset. Now again you went to the government and asked for the help. The government said that we will finance you 20% of the project, don't worry. Now 20% of this project, if the government is ready to finance you, means it is giving you a kind of subsidy or grant or reimbursement, whatever it is. So if the government is financing you 20% of your project cost, it means they are ready to finance you 24 crores, right? 24 crores, that is 20% of 120 crore. Now, this is the benefit which the assessee is going to get from the government in the form of either subsidy, grant or reimbursement. Now, what is the mischievous assessee trying to do? The mischievous assessee, obviously, he has to reduce this from the project cost, right? Yes or no? Yes, Palani. Now, what the mischievous assessee is doing? He is reducing this from furniture and building. He is not touching plant and machinery. And you are intelligent enough to understand why he is doing so. Why he is doing so? Still, I would like to confirm that. Because plant has higher rate of depreciation and furniture and building has lower rate of depreciation. So he is removing 24 crores from those assets which are giving us less benefits, right? So if I reduce from plant, then I will lose my 5% extra depreciation on plant, na? Further, if I am a manufacturer, I will also lose additional depreciation, right? If I am a manufacturer, I would also lose additional depreciation, na? Therefore, he is removing from plant. He is not, sorry, he is removing from furniture. He is removing from building. Preferably, if there is a residential building, he will try to remove from there only. Because residential building is further reduced at 5%. Depreciate 5%. So, the government has made a proviso in explanation 10, which says that if you are getting subsidy, grant or reimbursement for group of assets, that is plural, then you have to reduce your grant, subsidy and reimbursement proportionately from all the assets. Are you able to understand what I am trying to say? It means from plant you will reduce 20%. It means how much will be the 20% of plant? 12 crores. Yes, 12 crore na, 20% of plant on the board. Are total plant is 60 crore na. Are 20% of plant will come to 12 crore, right? And then 4 crore you will reduce from furniture, right? And 8 crore you will reduce from where? Building. This is how you are going to reduce it. You check it please this, and there is an example below. You can go through that also if you want. So this paragraph talks about group of assets. You can see this one word is playing a lot of importance. Assets, not singular asset. Is it clear? Now the discussion does not end here. There is a very interesting discussion which is going to start now. I would request you all to again read this paragraph, please. Forget about this example. This is something which is very simple, which I have written on the board. That is the same example, right? With might be some change in numbers. Read the paragraph carefully. Now, if you have read it, let me know. Read? Now, pay absolute attention now. Suppose there was one assessee, ABC Limited, who has taken some loan of 5,000 crore rupees from Government of India. Okay. Now, why is he taken the loan? He has taken the loan for the purpose of purchasing fixed assets. Okay. And he had bought the fixed assets of 8,000 crore rupees. Now, after he has bought the asset, okay, he is using the asset for the purpose of business and everything is going fine. Now, obviously, he has to repay the loan to the Government of India, right? Now, suddenly he went into huge losses and he does not have a financial capacity to repay the loan now. So, he is going to government for a what? Waiver. So, does government waive off loans of certain people? Yes, they do waive off loans, right? They do waive off loans of lot of businesses. You might have heard in newspaper so many times that of such a big business house, the government has waived 10,000 crore. Of such business house, government has waived 25,000 crore. It happens. Now, my question to you all is, listen carefully. It's a very, very, very important and technical discussion. This waiver of 5,000 crore rupees, which is done by the Government of India. Now, what will be the treatment of that? Will that 5,000 crore be reduced from the cost of asset? Okay. My question to you all is, will explanation 10 to 43(1) be applied on waiver also? Is waiver also a benefit from the government? Is it also a benefit from the government or not? It's a benefit. It's an indirect kind of subsidy only, right? Right. But you cannot term that as subsidy, definitely, right? Can this transaction be covered in explanation 10 to 43(1)? It is related to asset. Loan is for asset. That is the first thing which I have said you at the beginning of the discussion. No, it's not defined.
I mean, the department can take the view that reimbursement also includes not just immediate reimbursement, but after a period of time, after 1-2 years.
In short, it is debatable now. This issue is not very straightforward. All of you agree this or not? It's not a prima facie case. Do you agree to this sentence? It's a complicated issue. Do you agree whether it will come in explanation 10 or it won't come? It's a matter of litigation or not? Yes? Prima facie it should not come. Why? Because the law is very clear about what? Subsidy grant. Is it a subsidy? Is it a grant? Is it a reimbursement? You cannot term these words to waiver, right? It cannot come over here. So there are difference of view over here across the country. Some high courts are saying it can come. Some high courts are saying it won't come. Okay. Now what Government of India did? In 2015, listen carefully. Now it's an advanced level discussion. Pay absolute attention, all of you, please. In 2015, they amended the definition of income. Where is income defined? Please don't forget this. Yes, in the very first lecture we have done it. Income is defined in which section? In section 2, clause 24, right? In which there are 31 clauses. Yes or no? Entire discussion I've done it with you all, that how the government increased the tax rate to 97%, and then how they increase the tax base by increasing the definition of income. Yes or no? And I have told you at relevant point of time I will open the definition of income. I have told you that, right? At respective time I will open what is income, 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 and like that we are going to deal all 31 of the clauses. So in 2015, Finance Act 2015, the government amended the definition of income and they inserted a new clause, rather a new subclause, because this is already a clause. A new subclause 18. What does this subclause says? Shall we read that? Let's read that. Come to next page, on page number 2.18, please, all of you. Subsidy inserted by Finance Act 2015. Shall I read? Shall I read, Palani? Income includes what? Assistance in the form of what? Subsidy. In the form of what? Grant. Cash incentive. Duty drawback. Waiver. Concession. I will again go back. Waiver. Waiver is what? Waiver is what? Is that 5,000 crore now income in the hands of assessee after 2015? It means he has to add to the PGBP income. And he has to pay 30% tax on that. Let me go ahead. Concession is income. Reimbursement by income. Government is tired now. The government is saying by whatever name called. How many jargons we will put over here? By whatever name called. But again we will have a read through. Assistance in the form of subsidy is an income. Grant is an income. Cash incentive is an income. Duty drawback is an income. Waiver is an income. Concession is an income. Reimbursement is an income. Acha. All these things are given by whom? That also should be seen or not? Who is giving all these things to us? Shall we see that? Who is the authority? Who is? See here. Forget. Leave the section. See here. Leave the section in between. See here, please. We also need to see that all these things are income, right? Sentence is not complete. The provision is not. I have not read the complete provision so far. The provision is still going down. I have to read till here. In fact, I have to read till here. Then the provision will be completed. Listen carefully. All these things are income. Subsidy is income. Grant is income. Cash incentive is income. Waiver is income. Reimbursement is income. Duty drawback is no doubt it is income. But we have to equally see it is income in my hand when it is given by whom? Who is the giver? That also should be seen. Are you able to understand? Yes, it will be income when Prashant will give me, when Vignesh will give me, when government will give me, when ICICI Bank will give me this waiver, when it is in income. Are you able to understand? The giver is also important in this section. Shall we see the giver? Shall we see the giver? By whom? Say. If central government gives you all these things, then this is income. Are you clear? Are you clear? If state government give you all these things, then it is income. If any authority means like local authority, municipal authorities, etc. If any body, statutory bodies like RBI, etc. Or agency is again a governmental agency. Mainly, if you read from year till year, these are all mainly which people? Which people? Please tell me. These are all different kind of bureaucrats. You can say these are all relating to government only. Are you able to understand this? Or else they would have used easily, na? Any person they could have used, na? They are not using any person. They are using if it is given by whom? Say government, central government, state government, body, agency, authority. Most of them are relating to government. RBI is a governmental authority. It's a governmental statutory body. Yes. Municipal authority is more or less, it's a part of the constitution. It's a governmental authority. Now, this benefit can be given to you in, say, or kind to the assessee. Now, just wait. We have to stop here. We will read this after 5-10 minutes. Okay. That is a different discussion. Okay. We'll come to that discussion in a while. Now, listen carefully. Now we have to compare this. Now we will make a master chart also later on. Okay, I'll be making a master chart on this discussion. But there are a lot of doubts that can come to students' mind after 3-4 months. I don't want all those things to happen. We have to clarify whether you ask or not. It is my duty to answer. Explanation 10 says what? Please tell me. Say na. If you receive subsidy or reimbursement for what? For obviously fixed assets, plant, machinery, building, furniture, right? By whom? No. In explanation 10, it is any person, check, which will include government also and other persons also, right? So can I say any person and government both, everybody is covered in explanation 10? Any person, government, etc. Right? The scope of person over here is very wide na, as compared to the scope of person in 224. Are you able to understand that? Versus, let's go to what? Section. We will make a master chart after some time, after we are done with this particular entire discussion. Yeah, screen is not there. Just wait. Pay absolute attention. What does 224 says that? That if you receive any subsidy, grant, you can say reimbursement also is covered, na? Right? Then cash incentive, then duty drawback, then waiver, right? I can say etc. yaar. Then they are saying any by whatever name called. By whom? By central government, by state government, etc. That is only governmental authority. The scope of person over here is narrow. The scope of person over here is wider. Now you guys will tell me please, what is the treatment over here? Tax treatment. You have to reduce from actual cost, right? And what is the treatment over here? Add to income. There is a great difference between the two, na? Reducing from actual cost will how it will affect you? Tell me. It will lower your depreciation over the years. It means it is going to affect you not in one shot but over the years. Do you agree? But adding to income will affect you immediately. Do you understand? You have to pay 30% tax of 5,000 crore waiver today itself. Right or not? Both the treatment are different. Correct? Are you clear? So, now the question is, there is a doubt which should, you can take a photograph of this also later on. This will help you to further analyze the things in a proper manner. Just wait, I'll give you time. Just wait at the end of the lecture. Now, the moment this particular amendment was made by Finance Act 2015, there is a doubt which came to my mind. What do you know? The doubt is subsidy, grant and reimbursement. I am highlighting these three terms with different colors. If I receive subsidy from government, or if I receive grant from government, or if I receive reimbursement from government, then what the hell I should do? That too if I receive them for fixed asset. If I receive subsidy, grant and reimbursement for what? Fixed asset. Then is the provision not overlapping with explanation 10? Then shall I reduce from the cost as per explanation 10? Or shall I add to the income as per income definition? Will this doubt come to my mind or not? And that is the reason they have excluded over here explanation 10, grant, reimbursement and subsidy. Can you see that? Check. What did you understand? First read that, other than point number A. Once you read this, what you understood? What will you do if you receive subsidy, grant or reimbursement for fixed asset? What will you do? Will you treat it as income or reduce from cost? We will reduce from cost. Is everyone clear till here? We'll make a master chart. We'll see there are 4 or 5 different possibilities. We'll write all of them together. Okay, just wait. Let me complete all of them. Shall I go ahead? Now, there is one small issue which came. The moment this was announced by the finance minister Arun Jaitley in 2015. Arun Jaitley ji announced this on 28th of Feb 2015 because at that time budget used to come on 28th Feb. Now the budget comes on 1st of February. Okay, pay attention. The moment Arun Jaitley ji announced this in 2015 budget, I don't know whether you are aware of the situation which used to prevail at that time. There are a lot of people in this country who were under a great doubt. Common people, I am talking about common people, were under great doubt. Do you know that the government used to give some kind of subsidy for cylinders earlier? Gas cylinders, do you remember that?
Yes, sir.
Earlier, it used to be given by the government of India. But now they have stopped that. Do you remember that? So these days, they don't give any kind of subsidy for what? For gas cylinders. But at that time, they used to give. So there was a doubt in people's mind that whether the common man will be getting covered in this or not. Literally speaking, whether he will get covered or not. Yes, he will get covered. It is an assistance in the form of by government. You will get trapped in 22418, right? Similarly, if I get some subsidy from the state government for my studies, do government subsidize students? Some kind of scholarship is given, something is given. Yeah, it is any kind of assistance. Now it is from government. So am I supposed to pay what? Income tax on that. So CBDT came up with a immediate press release. Read this on the next page. They immediately came up with a press release on 5th of May 2015 that if you receive any subsidy etc. in your personal capacity, which capacity? Personal, it will not be income. Is it correct or not?
Correct.
It is absolutely correct. It cannot be taxed here. Hardly you give 200 rupees, 300 rupees as subsidy. In that also you want income tax. Have some shame here. Right? Literally speaking, that subsidy was more or less utilized by very poor people only. Yes or no? Even though it was for everyone, whether you are poor or rich, it doesn't matter. That subsidy does not differentiate between poor and rich. It used to be given to everyone. Then Modi ji used to say, that if you don't require, please what? Voluntarily give up that, renounce that. So there are more than 1 crore people who renounce that also. Yes, there are a lot of people who renounce that, right? But then they renounce the subsidy only. Then forget about people renouncing it. Then they only renounce the subsidy concept.
Now Karnataka and all these, they are again bringing at the state level.
Yeah, state level they might be bringing. That is a political decision, right? That's a political move because these days the politics in India is based on freebies. Freebies politics have started in our country because of Arvind Kejriwal. He has started this, right? Anyways, now coming to this discussion once again, pay attention on the board. Now, when this particular provision came, you know what is the treatment. If the subsidy, grant and reimbursement, please tell me answers to few questions. Please tell me, please see here. If the subsidy, grant and reimbursement is for fixed asset, then what will you do? Reduce it from the cost because explanation 10 will apply. But if the waiver is for fixed asset, then what will you do? Add to the PGBP income, provided the waiver is by government. Yes or no? Okay. Now, there was one serious issue which came after this amendment. Serious issue. This amendment came in 15. The serious issue was encountered by the income tax department, and therefore they amended this definition in 2016 once again. Let me tell you the serious issue. Please see on the board, all of you. On 28th of February 2015, our ex-finance minister, the late finance minister Arun Jaitley ji, announced this provision of section 224(18). Okay. Apart from this, there are many other things which is announced by a finance minister in a finance minister speech. A finance minister's speech is not only from the perspective of taxation. It speaks about economic policies. It speaks about segregation of funds to be given to different areas in this country. Yes or no? Like if you have heard any budgets in your life, you would have heard that finance minister announces, I propose to allocate 500 crore for this purpose. I propose to allocate 1000 crore for say Manrega scheme. I propose to allocate 3000 crore for say for example women safety. I propose to allocate 2 lakh crore for insurance. I propose to allocate 50,000 crore for Ujjwala Yojana. I propose to allocate 30,000 crore for Jan Dhan account. Yes or no? All these kind of big proposals are made or not? Yes or no? Where the entire funds will be allocated to different areas. Nobody knows where it is utilized. And people, common people of this country are not interested also. Yes, you and me, have we ever checked that whatever finance minister has promised in 2022 finance bill, 2022 finance bill, have they implemented or not? Do we check that? Nobody checks. Okay. So some things they implement, some things they don't implement, some things are because of corruption. At higher level, they might have allocated the fund, but at lower level, there is a corruption. So it does not get implemented. The question over here is, when a finance minister is announcing so many things, how it gets operational? Finance minister has to give that money to different people. He will not give all the money to one person. And then one person will do everything. He will take care of Manrega also. He will take care of women safety also. He will take care of construction of houses also for poor people. It cannot happen. There has to be a different people who needs to be given that particular responsibility. Agreed or not? Therefore, my question to all of you is, pay attention please all of you. My question is, suppose finance minister say that I propose to allocate 1000 crore for what? Women safety. Or I propose to allocate 3000 crore for what? Clean Ganga program. Okay. Which is one of the objective of this government. Or I propose to allocate 5000 crore for Swachh Bharat Abhiyan, which is also one of the slogans made by the our honorable Prime Minister. Okay. So now the question is very straightforward in front of all of us. How this is getting operational? Who is going and cleaning Ganga? Who is providing safety to women? Who is going and cleaning this country? There has to be some authority who has to be put that responsibility with. Yes or no? So for every purpose, the government makes what? A separate trust. What they make? A separate trust for that purpose. Okay. So one trust will be made for women safety and the finance minister will allocate the fund to that trust. Okay. And accordingly, that trust will utilize that particular fund for that purpose only. Otherwise, the money will get mixed. Will not come to know only which money is for what purpose. The budget has to be allocated to some respective authorities. Now, this is the practice which is there since long time. This is how the country runs. This is how the finance budget is allocated. Now, a very funny thing happened over here. This is a trust for what? Women safety. Okay? Listen carefully. I was laughing like anything when I saw this. The finance minister allocated 1,000 crore for women safety to a trust so that this trust can work for women safety in this country. Yes or no? The assessing officer started taxing these trusts only by saying that it is a subsidy which is received from the government in the form of an assistance. Assessing officer is not wrong. He has interpreted this absolutely correct. You can check it if you want. Is trust a person? Does that person is receiving a subsidy or a grant or an assistance from the central government? But that is never the objective of the government to take tax. It is the government's own money here which is getting allocated to different person for the welfare of this country. Yes or no? So they had to come up with an amendment in 2016 and then they inserted point number B, exclusion. Are you able to understand? Shall I read this? What is the point written in point number B? Read with me. What is written first? Subsidy or grant. Reimbursement is not mentioned here. As a student, what you will know? What you will do, you know? In the flow of writing the answer in the exam, you will write reimbursement also. You will come to know reimbursement cannot be written over here. It will become an illogical sentence then. I will come to that in a while. If you are intelligent enough, you would have understood why reimbursement cannot. Government cannot tell that trust, clean the Ganga first, then I will reimburse. Can government tell that trust like that? Government cannot. That trust is nothing but a fictional entity, only formed for the purpose of that particular purpose. Are you able to understand that? That is the reason reimbursement cannot be used over here. Are you able to understand? So, what is the term which is used? Any subsidy or grant by central government. So, who is giving the subsidy and grant? For the purpose of corpus. Corpus means what? For a specific purpose, right? Have you heard the word corpus in your accounts? Where you do a chapter called as non-profit organization, where there is a corpus fund on the liability side. Whenever I say a corpus, it means that money is for what? A specific purpose. So is this money given by the government to the Women Safety Trust for a specific purpose? It is not for general purpose, that use it for any purpose of the welfare of this country. No, you have supposed to do only women safety. You are supposed to use this money only for cleaning the Ganga program. Therefore, the subsidy or grant by central government for the purpose of corpus of a trust or institution established by what? Central government and state government, as the case may be, will not be coming in the definition of income. Are you able to understand it?
Yes, sir. Yes, sir.
So I would like to ask you just one question out of this 3 lines. Shall I? The subsidy or grant will be given by whom? And for whose benefit?
The central government or the people.
It can be, no, it is for the people. It's a very general answer. Answer me from these 2 lines. Trust or institution belonging to whom? Yes, that is what I want you to catch. That even the central government, if they are giving the money to whose trust? Even a state government trust, then also it is not an income. Are you clear? So the giver is, and the receiver is either a CG trust or a SG trust. Are you clear? I hope it is clear to all of you, right? So now I'm consolidating all the discussions which I have done so far, okay? And I'm making a master chart. Still, I have to speak few things over here. I have not spoken the entire section still. With the help of this master chart, I'll be speaking with the next few things which I'm going to speak now. That will complete all the possibilities that can come to our mind. But a master chart is required. On the day of exam, we cannot go to explanation 10, then we cannot go to definition of subsidy, then we cannot go to CBDT press release. Yes or no? We cannot do all those things. We have other things to do in our life, right? Please see over here. Treatment of subsidy, etc. You have to tell me the answer, okay? Shall I write the first one? If subsidy, grant or reimbursement is for fixed asset, don't write, just wait, because you will not come to know exactly how much space would be required. Just wait. It is by government or any person Then what will be the treatment? You have to tell me. We have to reduce from the cost. Reduce from actual cost, right? As per clear? Shall I go ahead with the next point? Next, if subsidy or grant or reimbursement, etc., is by government people, okay, but it is for buying raw material. Government is helping me to buy raw material. Then what will be the treatment? Will it be considered as an income under 224? Because 224 does not cover fixed asset subsidy. Yes, it will cover obviously the other revenue subsidies, na? Then it will be income as per section, say 224 clause 18, sub clause 18. Is it clear? Shall I go ahead with the third point? Third, if the subsidy is for benefit of personal purpose, then what will happen? Say please. It is not an income as per CBDT press release dated 5th of May. That need not be remembered. Okay. Right? Shall I go ahead? If everything is there in front of us now, then it will be very easy to revise. Correct? Henceforth, you need not see all these things from the book. You just see this chart. But the real test is still not completed. I will test you now. Shall I ask you next question? If waiver for fixed asset or raw material is done by government people, then what will be the treatment? Will it come in explanation 10 if the waiver is for fixed asset? If the waiver is for fixed, you have taken loan for fixed asset or you have taken loan for what? Raw material. You can take loan for either of them, not from government. Government has waived it. First, let us talk about fixed asset. If the government has waived the fixed asset loan, will it come in explanation 10? Say na with confidence, Palani. Will a fixed asset loan which is waived, can it come in explanation 10? It cannot come because explanation 10 does not cover waiver. It only covers what? Subsidy, grant, reimbursement, right? Now let's talk about I have taken a loan for raw material. That is waived by the government people. That is explanation 10 is not possible only. Okay, because that is only for fixed asset. Will it come in the definition of income? Yes, an income in what? Both cases, right? As per section 224, same. Sub clause 18. Shall I go ahead? Last one. If waiver of loan for fixed asset is done by a bank like ICICI Limited, what will be the treatment in that case? Think and answer. Local authorities, municipalities, etc.
Can it cover a bank?
No. Bank is a company.
It cannot come under both these sections, but it should be taxable under some other section.
No, there is no other section apart from this. Definition of income is closed here.
I mean, I've got to see the definition.
Yeah, you can see the definition. You can see the book. The book is yours. Just don't see the notes which are there below the provision. Just don't see that because that will spoil my suspense. There are only two things here. Will it come in explanation 10? Why? It is not subsidy, grant, reimbursement. It cannot come in explanation 10. Now let's come to the definition of income. Does the definition of income covers waiver? No. Does it cover waiver? Definition of income. It covers waiver. But does it cover waiver by any person?
No.
It covers waiver only by government people, right? So this is a waiver by a private company. Arey, yes or no, yaar? This is a waiver by whom? ICICI Bank is a central government. Is a state government. Is an authority. Is a statutory body. Is an agency. It's a company. Yes or no? Therefore, this is neither covered in explanation 10 nor covered in 224(18). Therefore, it is not taxable because it's a capital receipts. You cannot tax a capital receipt unless it is what? Defined in the law. You only can tax what? Revenue receipts under the income tax law. Are you able to understand? If the government wants to tax this, they have to make a specific amendment in the definition of what? Say, income. So they could easily write what? By central government, by body, agency, and at the end they can write by any person. If the moment they write any person, whether person includes company, that we have done in the very first lecture. Person include individual, HUF, firm, LLP, AOP, BOI, company. Yes or no? Therefore, this is what the catch is. This transaction is not taxable, and there is a very recent Supreme Court judgment also on this issue, in which Supreme Court said that this issue is not covered under the income tax law. Therefore, it cannot be taxed. Are you clear? Yes, Prashant, please. Then it would have been taxed. Shall I write one more point? I don't have space over here. 6th point, can I write below?
Yes, please.
If the loan is taken for what? Working capital requirement and waived by whom? Say.
By ICICI.
If it is waived by government, then it is taxable. That everybody knows, na? That to everybody, that is directly covered in 224(18). What if it is waived by ICICI Limited? What do you feel? Then it is what? Then it is taxable. Now, how it is taxable? That I will be dealing sometime later. Later, we will discuss in, I will write, just interlink it right today itself. Discuss in section 41 subsection 1. We will see that later on. Because in section 41, we will do later on. That's the reason I was not saying this. Because Prashant asked, I said that. In section 41, what do you know? It is written, remission or cessation of a trading liability by any person is income. Is it a remission or cessation of a trading liability by any person? Is any person remitting your liability? Is your liability getting seized because of any person? That is covered in the definition of income. I can show you that definition of income over here. I am not interested in teaching that as of now. But because he has asked a question, that is the reason I am teaching that. So I will just show you this over here. Section 41, can you see this? Can you see this? Remission or cessation of a trading liability. That is, which loan? Prashant, exactly what you asked. If a working capital loan is waived off, then it is what? Section 41(1) will be applicable. It will be deemed income. Is it clear? But if a fixed asset loan is waived off, it is not taxable. And here I have written that we have also done this discussion earlier in the chapter of depreciation. Can you see this interlinking? This we are going to do in future lecture. But I have also interlinked with the past lectures. Can you see this, Palani? This is what we have learned today, na? This point number 3. What is that? This point number 3. If fixed asset loan is waived by whom? Please say.
Central government, state government, any authority, body or agency.
But if the loan is waived by like company, firm, LLP, etc., right? Then it is not taxable, right? This is what we are doing right now, na, as a discussion. And in the meanwhile, Prashant asked me, sir, what about working capital loan? Working capital loan will come over here. Is it clear? So working capital loan, can it be called as a trading liability, day-to-day liability? Yes, the trading liability is covered over here. But fixed asset loan is neither covered here nor it is covered in the future lecture. It means this person is going to be getting the benefit of non-taxability under the income tax law. Is it clear to everyone? Please tell me. So I would just like to ask you all once again, without showing you this particular chart now, because when I was showing you this chart, I was very slow in asking the questions. Now I would be slightly faster. If the subsidy is for personal purpose, then what will happen? Tell me fast. It is not an income, not taxable, right? As per CBDT press release, correct? If the subsidy is for buying raw material, it will be income as per 22418, right? If the subsidy is for buying fixed asset, reduce from the cost of asset as per explanation 10, because explanation 10 covers subsidy, grant, reimbursement for fixed asset, right? If the waiver is done by central government, is it income? Again, I am asking. I am not saying you are wrong. I am not saying you are wrong, but I am again asking. If the waiver is done by central government for a fixed asset loan, it is an income, because waiver by central government is income. Is it very clearly written in the law? If the waiver is done by central government for working capital loan, that is also income, right? In either of the case, it is income, right? If the waiver of the loan is done by central government if the waiver of the loan is done by a company which is fixed asset loan, not taxable. If that same waiver of the loan is done by a company for a working capital loan, then we will tax that under 41(1). Are you clear? 100%. They will not go in so much of depth, but it is our duty to understand the subject in a proper manner. Like that, so we will leave everything only. So institute doesn't ask, so let's not get into that. It is my duty to teach you everything in depth. Then let the institute decide what they want to ask, what they don't want to ask. We should be able to understand every line of your study material in a proper manner. Okay. So I request you all to write down this. Okay. Here itself, better would be if you write it down with your hand. You will be further be what? Revised one more time with this concept. Okay. And later on, you can also do one thing, that you can take a photograph of this also. This would further give you some clarity about the two sections. Okay. So if you want to take a photograph, you can take the photograph first and then you write.
Excuse me, sir, just one.
Yeah, I will just let everybody write this, and then in the meanwhile, Prashant, you can ask me the doubt. Okay. Yes, Prashant.
Just a follow-up question to that non-fixed asset loan, waiver of loan not for fixed asset purposes,
But for working capital, right?
for working capital or any other general revenue purpose.
Yes.
It would be included in income first under 224, because income is inclusive. So even if it's not included under 224.18, it would be included under.
Right.
Then to that, then we'll.
Because by default, listen, revenue receipts are always taxable. There is no need to define separately to revenue receipt, because revenue receipts are real income, right? What is not taxable is capital receipts. If yes, if you want to tax a capital receipt, you have to make a law. Without making a law, you cannot. Like that, so you can tax everything then, right?
The fifth one is not anywhere else specifically. That's why.
Yes, that is getting escaped. The law is very complicated, yeah. It's not, it requires a lot of learning.
It's a result of a battle of 60 years between intelligent chartered accountants
And the department.
intelligent IAS officers. So, of course, it has to be very difficult.
Yes, yes, definitely.
You said you were originally from Ahmedabad, right?
No, no, I'm not from Ahmedabad, but I'm not origin. I'm originally from Mumbai only, but I have a native place in Gujarat where my relatives and all stay. So we go over there. But I am from Mumbai only. I'm born and brought up in Mumbai only.
Also lived in Mumbai.
Where exactly in Mumbai?
First, I lived in a hostel in Kolaba area. So there's a YMCA hostel.
Yeah, yeah, I know that YMCA.
And then I rented an apartment in Hiralandani Estate in Thane.
Thane, okay. YMCA is on Nariman Point, na?
Near to Nariman
Nariman.
Point, exactly.
Right.
Legal theatre. So the legal theatre is on the junction of two roads, which
Yeah, yeah, I know that. Behind that, there is Bade Mia, yaar.
yeah,
There is Bade Mia, there is Baghdadi, there is Gateway. Everything is.
every evening we used to go and take a walk to Gateway. That was the starting of my career. That was way back in 2001, 2002. My first job in Mumbai was in Standard Chartered. Big build, 6 feet and all that.
What? What is different? Waiver is very much different, yeah. Subsidy is where you buy an asset at a subsidized cost. Grant is something where government will give you money, then you will buy the asset. Reimbursement is you will buy the asset, then government will reimburse you. Waiver is government will give you loan, then because of some reason, some extraordinary reasons, you are not able to repay the loan, so the government is repaying the loan. These are all different kind of transactions. You cannot say all of them are assistance. You can say all of them are assistance by government. but the nature in which they operate is different from each other.
It can come down, sir.
Yeah.
Then another question is linking with the accounting standards, sir. When the grant becomes reimbursable, so if it is of the government, earlier it has been treated as an income. Now the grant has become reimbursable. Can I, but as per charting section of 28, it has not been done in the during the previous year. So will it be allowed as a reduction?
It means you are speaking that once you receive the grant, now I have to refund it back to the government, right? That's what you are asking, right? Yeah, we will be dealing with that issue in tomorrow's lecture. There is a treatment of that in ICDS, which I'll be dealing tomorrow. Say, because every grant comes with some conditions which are attached by the government. In case you do not fulfill those conditions, then you also have to equally refund the grant back to the government. So what is the tax treatment in that case? For that, there is a specific ICDS which we are going to deal immediately after this. But today we are not going to get the time. So tomorrow, the very first thing we are going to do that only. Okay. Yeah.
Sir, when we a person pays a loan because he couldn't repay, then if we tax on that, how will he pay the tax?
What? Can you repeat?
We waived the loan because he couldn't repay. Then if we tax his income, how will he pay the tax?
That is his personal headache. That I don't know. That I don't know. That is a very, very logical question asked by you. A logical question asked by Palani is, a person was not able to repay the loan. That is the reason he went to the government so that the government can waive his loan. Now, how the hell he will pay tax out of that money, right? So, is he in losses, Palani?
Yes, sir.
If he is in losses, he can set off that loss against the income. So, at least the government will do what? Government will be able to achieve what? One thing, that at least his losses will be reduced by the government. At least government will try to eat his losses by making this waiver as income, right? If you are in significant losses, so you cannot say that I will carry forward the loss also, exempt my waiver also. Government says that set off your loss against the waiver income, and then the balance loss you can carry forward in subsequent years. Okay. Yeah. So we'll end the lecture here. The reason is because I have to start with an ICDS, which I cannot start right now. It will take some time for me to explain that. It's a big one. Okay. It's an easy one, nothing great as such. And in tomorrow's session, we are going to complete our depreciation discussion. And if time permits, we will continue with some other discussion. Okay. That is other deductions of section 30, 31 or 36 one. Okay. So for today, let's end here.